Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday UTC. A big shout out to everybody that's live on the stream today. And of course, for everybody that's watching this on Catch Up. Nitpal, good afternoon, my friend. Craig Parker from the sunny South Coast. Good to see you on again, Craig, as well as everybody else that's joining the stream. So let's not mince about too much. Let's just kind of jump straight into the chart. So the main focus today, as you guys know, is going to be on Bitcoin. We're going to take a quick look at the DXY and then ES as well. And then we're going to focus our Wednesdays a little bit more around alt requests and that. But if you guys have anything that's really pressing you want to look at, and we've got a few minutes towards the end, do let me know. Craig, really enjoyed the update. Brilliant. Yeah, cool. So, I mean, for those watching the stream that maybe aren't aware or aren't Burbnest members, we're transparent with all of our calls. So we post everything. We do monthly reviews. All of this is completely transparent for Nest members. And we thought, well, why not start sharing it with the general public as well? Not just sharing in the wins, right? But sharing in the losses, showing where we went wrong, where the trade idea might have been wrong or right, or the execution was right or wrong. You know, really trying to break this stereotype that's kind of set on especially crypto Twitter with a lot of people. Not everyone, some amazing accounts operating on there, but there's very much kind of like a win only type attitude, and that's just not how trading works, guys. Burned Menos, my friend. CS Lychee, good afternoon, everyone. We got Burned over here as well. Menos, we got people representing from all over Europe and Morocco now as well. Fantastic. It really is lovely to have you, people all the way from Australia as well, tuning into this and all over the world. It's a real pleasure. So, guys, I'm just after really just kind of sharing my thoughts for where we are at the moment. Now, I'm a bit annoyed with myself. Really, last week I had a few kind of medical issues, and it led me to kind of missing out on some moves that we've really been looking for. Airdrop Hunter, right back at you, buddy. Some moves that I've really been kind of looking at coming up. You know, been shared in the Bitcoin reports. I've mentioned them quite a lot. So I've started here on the 4-hour chart. And you know what? Let's do this, right? Forgive a little bit of the mess on there, but it shouldn't be too bad. So weekly wise, let me just pop the moving average off for a second and show you some thought process on this. So this is my thinking. On a weekly scale, we've come down, we've run these key lows down here, obviously had this really, really kind of like impulsive, heavy, volume heavy candle. Right? Look at the size of the body. Which, you know, when we have these type of moves, we leave these inefficiencies, right? We do expect them to get refilled. We're not sure exactly when it's going to happen, but it's always something that we monitor. So henceforth, at the moment on a weekly scale, while I've got these on here, these represent our fair value gaps between this candle and this candle, the gap here, and then the gap here between this candle and this candle, right? This is where the wicks fail to overlap, leaving what are known as inefficiencies, right? And the market tends to want to rebalance those. Now, this still looks like a very tempting target for me, the liquidity up here. And I kind of let my too high a time frame view pollute my thinking. So I had an APT long last week playing with the momentum. We'd kind of broken back into a small range that we'd been playing. And the trade reversed on me. And what I should have done, what I did wrong, was pay too much kind of attention to this time frame, the weekly, when I was looking to trade it on a much lower time frame, right? So what do I mean by that? Well, if we're using a weekly chart, then you'd want to be using this for kind of your main levels and for your analysis, and you'd want to be looking at a daily for your positioning, and then a 4-hourly for your trade management, right? If we're looking to execute on the lower time frames, then of course we need our high time frame bias, but we have to respect the different time frames that we're on. Otherwise, we're giving ourselves too long a period. You know, if you're basing your TA on a weekly chart, right, and you're executing on a 5-minute chart, obviously takes the weekly a lot longer to turn, right? So, well, it's really interesting, something I want to cover with you guys. But here on the weekly, we are where we are. It makes absolute sense for price to be chilling out a bit now after this. Look, 4 consecutive big bullish weeks. We took out this key swing high here. We've taken out this interim swing high here, right? And now we're ultimately, in my opinion, making an attack on the liquidity that sits above here. Now, that's all well and good. That's fine. The weekly doesn't really have a ton more to tell us than that. So let's drop down to the daily and show you where I got this from. So this, for me, is the real point of interest, right? So we've got this mother bar, which forms the inside bar as soon as we get this candle close here, all right? So this mother bar and this inside bar when this candle closes, it has to be within the high and the low of this candle's range. Then these two candles form what's known as an inside bar pattern. How we trade that pattern is both the high and low of the mother bar and the high and low of the inside bar form a range. Okay, so when that range is deviated and price closes back within it, we then expect price to travel to the far side of the range, in this case, the range low, via the EQ, the equilibrium, right? So all we do for that is we get our Fibonacci tool out, we snap to the top one there, we draw this down to here, and I know this is in a this is in our premium discount. So if I just change that to our regular fib, we can see the 0.5 level here provides like our range midline, right? Our channel EQ. Now we can see here how well price has respected this, right? Resistance, 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 big breakthrough, deviation, closed back within, aggressive sell-off below the 50 line, yeah. But what you'll notice this time is this daily candle came up and it closed above the 50 line, which is what these previous failure candles hadn't done. So when we get that close, we see price travel down into a discount here, then we can expect expansion towards the range highs. Now, again, what we've done here is we've deviated the range highs. We've now got a daily bearish divergence, right? Which, for those of you that don't know, I use the B Pro. That's our Burbicator Pro indicator. It takes 10 or 11, I believe, different oscillators and works out the divergences on all of them and then gives you this here based on a percentage, all right? So the fact that we got the divergence here, the fact that we've closed back within this range, also look at this really long upside wick. It's taken liquidity from above this candle's high and this candle's high as well. And this kind of move that finishes like in a shooting star almost, or like a pin bar style candle, that's when you have a long tail wick and the volume's all in the head, is a sign of a reversal candle, right? So when we then close back within this range, what we're saying to ourselves is the high probability is that we travel to the far side of the range via the EQ, yeah, via this 50% line. Now, remembering our rules from back here, when we have a strong close, that means a high volume body close below this level, we then look for the retest and for price to sell off. And we can see that we've had that literally to the dollar here on this retest, right? Now, I don't typically trade Mondays because I like to see how Monday's range develops. And also, as well, we need to be aware that traditional markets aren't open on Saturday and Sunday, so it can be a little bit misleading sometimes when we get to a Monday. The market's open, you have this price action on the Saturday and Sunday, but then being a risk asset like Bitcoin is, it's very, very heavily led by the other equity markets, which we'll cover very shortly. So just to check in the comments a bit, Ken, great to hear from you, buddy. Who else have we got on there as well? Saw you, Airdrop Hunter, CS Lychee, welcome. And Schumann, thank you very much, bud. That's really lovely of you to say. It's a fantastic community. It's something I'm really, really proud to be a part of. It's like a family to me over there. And look, the reason we're transparent, the reason we do what we do, we offer a call service, but the call service people can get for free through our partner Bybit, right? All they have to do is sign up. There's details on the website. There'll definitely be details in the description if you're interested in that. But the fact of it is that we do that so that people can start earning, right, while they kind of focus their time on learning, yeah? So you've got access to a team of professional traders who all trade for a living and have done for a number of years. It's a collective, and we give access to those calls, right? And if that's something you guys are interested in, something you want to follow along with, you're absolutely welcome to do so. But the key for us is an education-based community, right? And that's enabling people and equipping them with the right tools to, get their financial freedom, or to just get a little bit of extra money coming in every month that helps with these rising costs, that helps with mortgage payments, bills, energy, etc. Right? So if it's something you're interested in, you can find the stuff in there. But thank you very much, Anshuman. That's very, very kind of you to say, and I'm glad you're enjoying it. Uriel, hey, good morning. Good morning. Good to hear from you. And Anik as well. You're very welcome, mate. And we will absolutely pop a look at the DXY chart as well. So before I ramble your faces off like normal, let's pick up on where we are here. All right, so this is the inside bar we're really interested in. Think of it like this: here's our range high, here's our range low, and this represents our midline. All right, the 50 line down there. And in fact, let's draw that in. Yeah, put that in here, and there we have our range. All right, now we've also got this Here, you'll notice we've got the other mother bar, which again is daily, right? But the reason that this is in purple rather than red is just so that it just differentiates it, all right? But we've got this here as well. We can see the high of the candle, the low. This was the inside bar in here. And again, this was run along with this. So our target now becomes the 50% of this, which we also close below. And now ultimately this mother bar low followed by this mother bar low. That is just an abbreviation of that, all right? So it doesn't get the charts too messy. Now, the other thing you'll notice on the daily chart are these equal lows or relative equal lows, all right? Which when we drop to sort of the 4 hour and 1 hour will seem even clearer. Now, the reason that equal lows or relative equal lows are, or equal highs, relative equal highs. And the reason for that term relative equal highs is purely for the fact that they don't have to be exact. You know, if that's 22,727, that doesn't have to be 22,727 as well, right? That one, in fact, is, when we look at the low of that candle, that's 22,755. But the fact that both have been stopped around that level shows us that there's something stopping price here, right? Capping it. Price is coming down, bullish reaction, coming down into, again, bullish reaction. So we believe that there's buyers here. So if we extend this line across, to here, and I'll put it back here and draw a new line in so we don't get confused, then that's something that we want to take a look at, because that's where we would expect something, purely because if there were buyers in there before, we can expect there to be buyers in there again. The other reason as well is people that were long here, are going to have their stop losses under here, or people that were long in the move up. Now, those stop losses turn into sell orders, right? If you're a large account that needs to fill a lot of buy orders, you typically want to run these kind of levels, because you're going to generate breakout traders, you're going to take stop losses of people that are going to tell into sell orders, and all those sell orders you can fill with your buyers, all right? That's the kind of concept. So, as we sit here, there's just something else I want to add to the chart, right, which is the 20-period moving average. Now, something I found really interesting as we were looking at this move up. So, anchored from the origin of the move up, from the impulse leg, here to here. Now, I'm just going to change this to a traditional Fibonacci, right? Is that when we look at this on the leg up, right, price's correction down to here, you would normally expect a move down into 0.5, maybe into the golden pocket, the 618.66 level, But what we can see here is actually price is kind of holding up quite well here. And what we want to do put in here, actually, you can add our 382 and our 236 as well, because for me, these are significant points too. Now, you expect the 236 to go through, right? But the 382 is the first kind of level on a fib where I'm really getting interested. If we've got a strong uptrend, then I'm looking for one of these to hold, right? And like we said, we look on this on the higher time frame, we've got clear liquidity sat up here. This could still be a corrective move before a push higher, or it could be the start of a larger correction or a reversal, right? So we want to be aware of our fib level. We can see we're holding the 0.382 level here well, which is of interest. We can also see, obviously, that it's acted as support here as well as here. Now, we've got that as confluence along with the 20-period moving average, right? We can see that we've run these equal lows. So all of a sudden, we can start to paint the picture and tell this story as to why we can see price holding up here. Bear with me 1 second. I'm just going to pour my tea. Lovely. I'm not sure if Dan's on the stream today, but I think he will be glad to hear I'm back in the office and back on the Yorkshire tea. Burn, quick question. What have we got here, mate? From the Birdnest. Hi, BC. Why do you use a moving average instead of the EMA? Do you know what? For me, it's funny, actually. I'm very much a creature of habit. It's what I learn on. I recommend everyone does some good book work, either through CMT or other kind of official resources to learn about moving averages and how they are and what they depict, right? Because it's obviously based on a period of time, but there's also other formulas and calculations that work out into the smoothing nature of the moving average as well, right? So for me, I'd always really used a 20 and a 50. So I don't really use it a lot, in truth. I'll show you now as we drop down onto the 4 hour what I really use it for, right? and often it's more so in teaching, but I also find it can be a good level way. See, like this, all I've done with this is I've gone on the moving average, yeah, typical MA, and I believe you can do this with the EMAs as well. You can go onto time frame, and rather than have it selected as chart, you can select it as daily or any time frame you want. And all it means is that it will then set it on that time frame. So at the moment I'm on a 4-hour chart, but my 20 moving average is still a daily, right? And then I go on to the style and I change it from a fixed line, which would give us that, to align with breaks, because I find it's unobtrusive, right? It doesn't really take my focus away too much. I do the same with the 50 period moving average as well. So it just gives me a little visual indication, because one thing that I find, or not I find, but one thing when you study is that when price typically moves away from a mean, it reverts towards the mean again, with this being the mean being the moving average, right? So you can see we really separated from it here. Price pulled back into it, created more separation. We had this other gap. And then slowly but surely, price has been coming back to reach an equilibrium, if you like, to reach parity. So now we're here. This is quite a key point for me, because this is the first time that we've retested this since the 6th of January. So what would I want to see in terms of how it would look? I'd want to see a strong daily close below it, first of all. And typically I don't like trading moving averages, but I would want to see price close below it and then look to retest it before selling off again. And then quite often you can see that they fill between the different moving averages depending on what you study. And this is the daily 50 moving average here as well, right? So we can see if we lost this and retested it, I'd be looking for price to come down certainly towards the 50 moving average on the daily as well. Okay, so let me just turn them off. Like I say, they're only a small part. They just help give me a little bit of extra confluence, right? So let's put our index sessions on. The next thing that I want to cover is B Pro. Okay, so divergences, right? Now, for anybody interested, by the way, that doesn't have access to B Pro, you can give me a shout and I can send you the link so you can find more about it. It is a paid indicator, but do let me know if you've got interest. But if not, divergences are something I studied a lot more, especially when I was taking on the first initial runs of becoming a professional trader. And what I would say to people is that they can be very, very powerful tools if used with the right confluence. So when we look very simply at what we've done here, when we're setting our moving average, when we're setting our inside bar, so we've got, that's the origin, that's when the bar closes, then what we've got on here is then when we get our divergence, we've had our deviation of the range, we come back and close within the range. It gives us that little bit of extra confidence to say, okay, what you're seeing in terms of price action is also being reflected in the difference between the oscillators as well. Sure, Jody, Uriel, no problem. Let me get a link for you guys. Or in fact, actually, guys, if you can do me a favor after this, because unfortunately, having some technical issues today, one of my screens isn't working. If you can just come and grab me on Twitter. There's my Twitter handle. So if you can come and grab me on Twitter and just pop a reminder on there, I'll get the links and all the information and that shared with you guys on there. And then if you've got any questions, you can always contact me and I'll run through it with you. So any more questions? Don't want to miss anyone out. Burned. For me, it's always the EMA 21 on any time frame that works really well. Yeah, exactly. I think everyone has their favorite kind of setup with that. I think a lot of it comes down to kind of how you learn with them. So when we're looking on here today, and this is where we are, we've got our divergences, right? So we're still playing that out. We've got our target here. We've hit our original target, which is our equal lows, right? I do now believe that price can continue to search out liquidity. We're going to be looking at the mother bar low here, and then ultimately the one below that, both of these being daily mother bars as well. So when we look at that, let's take a look just at a more executable time frame very quickly and see what we would have done in terms of our entries here. Now, I've got this other indicator on here that shows me session times. I heavily trade the New York AM and PM session, which starts here at 13:30 UTC. I do trade London as well sometimes. This particular indicator I'm using is made by a chap called Dr. Fuse. You can find him on Twitter. No affiliation, don't get anything for the indicator. He just makes some really lovely, clean indicators, and I find it really, really helpful to have it. Again, you hear me say this word a lot, it's very unobtrusive. It just means that it just doesn't kind of clog the screen up with too much stuff, leaves it nice and clear. So When we have our deviation here, right, which, like we said, we get our nice B Pro divergence here as well, gives us a bit of extra confidence. However, as we can see here, even on a 15-minute chart, it's all well and good to look at it on the high time frames and say, yeah, sure, I'd jump in here. But, when price comes back in the range, if you want to take the trade here, your stop has to be above this high, right? Because that's where your risk is. So you need to know that when you jump into a trade, what your risk to reward is. So let's say, for argument's sake, you waited for that, then here, and then you wanted a break of this low. Let's say you entered in this fair value gap in here, which I'll zoom in on in a second. And you've got to have your stop loss up here, a little few pips above that. And then you know that your first target's the midline. So that's a 1.61R trade. Now, with the probability ratio that mean reversion or range trading has, meaning that there's a higher win percentage but a lower reward, right, in comparison to swing trading where people may, and position trading, people may have 30% win rate, right, but their risk to reward is much higher, right? So that's the balance. So for me, yeah, that would still be tempting. I'd be thinking that's okay. But what I'd rather do, if possible, is kind of find a way to get in where I can have a smaller stop loss, right, and increase my risk to reward. So I wait for my session time. So I'm looking here in New York and I'm saying to myself very simply what I need to see. And I execute these typically 5 minutes and below, but I'll show you that they can still work here as well. What I want to see is I want to see a change of character, yeah, meaning that I want to see, as we see here, I want to see some highs swept, right? So we see we've taken out these highs with this move, right? Now, the key thing there for me, let me just get rid of that for a second. The key thing here for me is that we've taken liquidity out here, right? We've also run up into this level here, which is the origin of our breakdown. And now what we've done is we've taken out these lows, yeah, and we've moved towards a bearish posture by breaking this on the way down, right? Now, we still want to wait for the lower high, but what I'm saying here is because we've broken back inside the range, we can see the impulse in the move. We can see the displacement that it's caused punching down and through. And that's why this line is here. Then what we can do is take a measurement of the high of the move down to the low. We make this our premium discount, which for anyone that's interested, this is an ICT concept. I was a very small part of his original mentorship many, many years ago, and I really like this concept, which I still use today. And the reason for that is I'm measuring the leg as in the terms of the origin of it all the way through. And how do I stop it? I stop and measure when we get our first up close candle here. Yeah? So this leg here, what you would call like the displacement leg, that's the leg that's punched through and changed structure for us, right? Now, because of that momentum, because of the fact that we're here, and this to me is symbolic that the market is potentially ready to make a move lower, then I've got two options to enter here. I can take a higher risk, yeah, but higher reward entry here, in which case I need to find an inefficiency in this move, yeah, that sits within this green box, right? So we can see here we have the fair value gap or the inefficiency, right? Can you let me know if you guys can see that clearly? But I'm not interested in this part of it down here. For me, it has to be in line with this part of the green box, right? Because it shows that it's drawing up into a premium, meaning that we're getting favorable positioning for short trades. I hope you can see that we've just kind of drawn into the box here, just by a few ticks. And then the way to trade this is we take our short position. Obviously, as soon as this closes and we have our premium discount leg, we find this area and we set our limit order on here, right? Our stop loss goes above the high here. Or if that's particularly far away, you can go before the origin of the inefficiency, right? But obviously, it's just a little bit riskier, meaning the high of the first of the three candle pattern. All right. So we take our entry here. We know where our stop loss is up there. However, now when we look at drawing this down to our 50% range, we can see rather than a 1.6R trade, meaning that we get, 1.6x return for every dollar we risk, we've got a 4.09, meaning we get $4 back for every dollar that we risk. All right. So if we're right here and we ride this all the way to the midline and possibly even lower, yeah, but let's just say we get our 4R, then that allows us, 4 other trades, basically minus fees, of course, which you have to work out separately. So that's just to give you a concept on that. That's the kind of thing that I would look for. Now, if we go towards current price action, we can see we've run some key lows here. Remember, this red line represents our relative equal lows. Yeah. Now, the problem that I would have here is I still think price can go lower because I think there's more liquidity resting below this mother bar and this mother bar, right? However, if we were going to reverse here, then what we would want to see is this taken out because price has run these lows, right? We've taken liquidity below the equal lows there. Yeah. You would want to see a strong move up through this. Yeah. So we've got our low, we've got our high, higher low, break of this high, we've got our market structure break, right? Then within this move up, yeah, we would want to see a fair value gap that sits within our 50% discount premium range. And then we would look to trade it back to that. That would be our entry then to trade long. However, the situation we've got here is we've got the midline here. We can see how well respected that's been. Comes in and finds support here, loses it, retests it, sells off, retests it again almost to the dollar. Sorry, let me zoom in a bit. To the dollar and then sells off again, all right? So for me, there's not really a lot of space between here and here if this is a particular potential, rejection site. So I think it makes sense to look at price. If it does run here, say, okay, fair enough. It makes sense. We've taken out liquidity below the lows. Maybe there's more strength here than we think. But I'd definitely be looking more around this area here to see if price manages to reclaim it. Yeah, do something like this, wait for a purge, break of structure to the upside. Right, and while that looks messy, what this actually represents is we've had a dynamic move through, we've caused displacement, we've tested this, we run liquidity on the lows, take out the higher that sets the low, and then when we retest that, yeah, once again, we would look for moves, inefficiencies within this move up, right? Because what that does is it gives us a little bit of confirmation that price has established itself above this level, right? That we're not just going to get trapped because we can easily get trapped along with breakout traders in that area. Now, we might reverse here if we do the opposite, yeah? We might actually be running up here to take some liquidity, right? And if that's the case, what I would want to see is price then come back down. And once again, that was terrible. Treat this level here as resistance, yeah? And then we find our inefficiency in here, which would represent our entry. We've then got these lows down here to target, as well as obviously these two key lows down here as well. All right, guys, so that's my current thinking on Bitcoin. Let's flick our attention over to DXY, which I believe a few people asked for as well. So let's see where we are there. Now, we can see with the DXY, this is why I was really, really interested at this level here. So if you want to check any of the past streams, this is what we've been watching for quite a while. The reason for that is because when price broke down here, took out this low, this is the order block. Let me just zoom in for you. Yeah, this is the order block here, the last down candle before we had this move up. And for me, this is always given extra significance when you see price move away and then retest it before it then has, again, an impulse move away. Because what that's telling us is that, okay, if the orders are in here, price has moved away, taken out an interim high here. Then it's come back and retested it. Yeah, set the higher low, taken out this high, broken structure to the upside, and then on a macro scale, taken out these highs, which has then led to the continuation of the bullish trend, all right? So when price does that, when we see an order block, right? So let's take, for example, this here. What we would want to see here is this respected, yeah? So what we see happens here, let me just do that in our color so we see that clearly, is price comes up, then when we sell off, this is the last high volume up close candle before price sells down, right? Now, what gives this extra validity, right, is it then being retested. So we see there's no retest here. Price doesn't retest it here either, right? Look how easily it just slices through it. Now, fine, it comes back down into this level. It finds support here at the mother bar. However, what we see is price just doesn't find any resistance here, yeah? So then we're saying to ourselves, okay, well, we want to see this flipped. So we see it come up. We see a little retest here, yeah? Price comes in. We had the retest, comes in. Then it comes back down, violates below it. Then, however, when it reclaims it, we can see with the candles here, bearing in mind we're still on a daily chart, these strong impulse candles higher, again, it just wasn't offering any resistance, right? Where actually, when it's offering support, we can see a lot of these candles getting trapped in the range here, yeah? So when we reclaim this, and then we retest it here, and we retest it again here, well, then we start to get a little bit of an indication that price could be willing to move higher. So we can then move on to our lower time frame and look to find some of our entries, okay? So with that in mind, that's why, just to give you guys some context on why I think this is really, really key. Now, obviously what we can see, and we'll drop down to lower time frames to explain this, is that as price lost this level here, and sorry, this isn't the mother bar at all, this I believe is January 2017's high. It is, yeah, sorry, January 2017's high, which is a really, really key level for me. We can see again how it's offered support, 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 all the way along here, little deviation. Then we have this fake out, this almost under and over, right? And then price has this sell off below. Now we've been trapped here. Again, we purged below this. But if we're thinking it in pure terms of buyers and sellers, right? And you don't need to think about it in terms of the number of them, but more the volume and the purchasing power. When we're looking at this here, we can see how price comes down below. We deviate, we come back above, and what did we say? Come here, look at this type of retest, yeah? Now, the candles tell us a lot, and especially the wicks. The bodies are the volume of the trading, yeah? The wicks are where price has tried to go, right? So price has tried to come back down this way, but has just been bought up, and then we have this really high volume candle here, showing a lot of bullish momentum. We then take out this key high here. We've taken out other liquidity above here without showing signs of slowing down. So for me, I'm really, really interested in seeing how we react when we get to 2017's high up here, right? Which is also in line, we can see with this fair value gap here, which is acting as a magnet for price to come higher. So for me, I think risk assets are probably in for a bit more downside while this continues to run hot. The moment that this turns and if it starts to purge lower again, then I think we see more kind of benefit towards risk assets like Bitcoin, the S&P 500, bits and pieces like that. All right. A quick question here from Bern. The super order block indicator from Makachaku shows very nice order blocks, fair value gap, break of structure. Yeah, Free has really nice vids. Yeah, it's how to explain it. Yeah, absolutely. There's a few on there actually, guys, that you can do it. And I always say to people that, you want to use those indicators to help train, get your eye in right now. Obviously, when you've done it at a certain time, you start to notice these inefficiencies and bits and pieces all over the place. But it doesn't hurt to have it, especially at an early stage. In the same way that when I'm teaching, I often use an inside bar alert. Yeah, which I'll just leave on for a second because I'll show you this on the daily very quickly because it's a pattern that I trade a lot, obviously, in terms of its ranges. But just to show you this on the 4 hour very quickly, we can see here we had this trend line declining with us. Price kept trying to break out. Deviation came back below. Deviation came back below. Then it broke out and retested this line here. We had this little immediate breakout above these highs, which I think would have trapped a lot of people to go long. Then we have the real typical move. We've got these relative equal lows down here, all this liquidity. Price purges down, convinces most people that this is now going even lower. So people start to sell aggressively. That creates lots and lots of short orders on here that then get bought into by big money players who then send the market higher. All right. So just to show you and just expand on this point very quickly, which I'll just take a quick look on back to Bitcoin for you and going to a daily chart. The idea of kind of drawing these ranges out. So if you go on this is just a free indicator, right? It's just called inside bar. IND/alert. Yeah. So if you're someone that's struggling with range trading or struggling with levels at all, then something like this can be really, really good, right? Because with experience, you start to spot these things when you're looking through the charts, right? But until then, that certainly doesn't hurt to just have these visual aids, like Burns alluding to there in terms of like the fair value gaps, right? Now, what I would say is if we just... Menos, no worries, buddy. You look after yourself. I'll see you a bit later in the week, mate. So let's just go anywhere, right? We can see here, for example. Yeah, now let me just clear all of this up. Right, get rid of that. Now, we can see here, for example, this was the range that was based off of an inside bar. Here's our mother bar, inside bar. Price deviates the lows. We trade it to the midline, reclaims the midline, trade it to the highs. deviate the highs, don't quite reach the mid, but there we get the deviation back down to the midline. And then you see here, like we've kind of got on the moment, price holding this midline, right? Then you can see when it's holding this, look, just doesn't want to go lower. Then when we get this strong close, and when I say a strong close, I mean something like this, right? Which is a big bodied candle, so showing high volume, high conviction, right? And then we can look for trade opportunities on this day, because on our bullish days, what we want to see is price open, trade lower to give us our buying opportunities before expanding higher. On bearish days, we want to see price open, trade higher to give us an opportunity to buy before selling off lower. All right, which is what we get here. So I'd encourage anyone to just jump on a chart, try and spot them yourselves, or use this as an indicator. And we're just going to pick one at total random here and say, right, how would we have traded this one? You can mark the mother bar and the inside bar. I find the mother bars tend to be a little bit more significant. Okay, now look, this, you have it from this moment on. This is tradable, right? From that moment on, from this very candle, because once this candle closes, our theory is always the same, right? We take our Fibonacci out, we'll draw in our range, EQ, all right, which is here. And once again, look how well respected this is. Support, support, close below, retest, sell off. This one just blasts through it, but look at this one. Acts as resistance, and then you get this big sell off below, okay? Now, what we're interested in are the deviations, right? So here, price comes up, deviates, comes back within the range, lower time frames, we trade it to the midline, down to the low, yeah? Then we're interested here when we deviate. Price deviates, closes back within, we trade first in the midline, then the highs, all right? And again, not trying to teach you to suck eggs here, but look, same thing. Larger deviation here, right? But we didn't get the retest, right? That's what we're saying. We get the close of a strong candle, yeah? But we then get this candle's close, which has a long upside wick, showing us that there's sell pressure. We then get a bearish engulfing, closes us back in the range, retest here, sell down to the midline, sell to the lows, right? So you can do that wherever, right? Just have a go, pop this indicator on. It's really, really cool way to do it. And then it will help sort of train your eye and get your eye into other opportunities. All right, guys? So very quickly before we go, let's take a quick look at ES. All right, so this is the S&P 500 mini futures. Just wait for the data to load. Here we go. So blue lines are just key highs and lows that I monitor. And this is the thing that I'm a little bit annoyed at myself at, because we got this run through on Thursday. Unfortunately, had some dental issues last week, which has just been a nightmare and still playing up a little bit. But by the by, there's always more opportunities, guys. But like with anything in trading, it's just really important that we show patience. Okay, so let's just turn this off for a second. And now we're on the daily. We'll just pop our B Pro back on. Here we go. Right, now obviously we ran the key liquidity above here, right? We see the strong reaction we had when we ran this daily high here. Yeah, this daily high, when we interacted with that here, yeah, see this candle close it. Look at the huge wick here. They're showing the heavy, heavy sell-off that we had. That was then, along with the divergence that the B Pro caught here, 91%, showing us there's a lot of strength in this, was the origin of the breakdown that led to this deeper corrective move. Now, we had the bullish divergence down here, which we've been playing out nicely all the way to the highs. But when we ran this level up here, I wasn't unfortunately in a position to trade this down. And what I absolutely should have done, which led to my miscalculation with the APT trade, right, was considered the fact that closing here and coming back down, we were looking, at least a small correction here. Again, deviation, divergence, back below a key level, retest of the underside, into this fair value gap here. Yeah, the inefficiency between that candle's wick and there. Lovely place for price to draw back. Do we know where it's going to go from here? No. I would definitely be monitoring this candle here, though. I'd be saying, okay, if this is the last down candle before the move up, we can see what happened here. Down candle, broke above it, retested it, and used that as momentum to push higher. So I'd be very interested to see what happens when we come in there. because if we come back down to this here, we would want to see this hold as support, in which case it might give us conviction to trade this higher. However, if we really carve through this quite easily, we'd be looking for this to be retested and then sold off a little bit lower. Okay. Now, remember that this is a correlated asset with Bitcoin and risk assets, right? So we look at this in the same way that what's good for the goose is good for the gander, right? Meaning that what's good for ES is normally what's good for Bitcoin as well, and the opposite of DXY, right? What's good for the dollar, if the dollar index is showing strength, typically risk assets like Bitcoin and alts are showing weakness, okay? So where we are at the moment here, we can see this inefficiency. Prices come down to fill this quite nicely. We also have this order block here on a 4-hour scale, which also has nice validity to it, because although we haven't had a retest of this yet, it has caused this inefficiency straight afterwards, right? Which can quite often be a sign that that's a key area to watch. So this consolidation as well is certainly an area that I'll be interested in. So either we're drawing into this and then we start to move higher. I think if we start losing these levels, I think we're looking for a more kind of sustained correction, or potentially even, the start of a bit of a reversal here on risk as well. Because if we look at the messaging that came out from the FOMC, markets seem to be pricing in the idea that there's going to be rate cuts this year. The Federal Reserve and Powell's message seems to be pretty strong that that's not what they see. But I think he was quite dovish in his statement when he mentioned that, let me think of exactly how he phrased it. I think he said, we don't see any rate pauses for the next 2 hikes. And I think they meant that to come across more hawkish or bearish, right? So bad, to discourage people. But I think it came across quite dovish, quite bullish, right? I think people were thinking, well, okay, well, you're almost admitting that there's going to be rate pauses in a couple of sessions' time. And I think that's injected a bit of volatility and a bit of belief into the markets. But I still just think geopolitically, we look at the problems that we're having there. We look at the issues that are going on with the markets, cost of living, where are people getting this disposable income from? Inflation's still a problem. Interest rates are still going up. I'm still quite cautious in terms of the macro outlook. I think, if we hold here for a little bit too long, then I think we could see a deeper correction. But let's see how this plays out. And I think that ES will give us some good insight in that as well. Craig, thank you very much, mate. It's a real pleasure to have all you guys on here. On Wednesday, can we look at inefficiency gaps and Rune? Yeah, 100%, mate. We can definitely take a look at those. And in fact, let's just, for the sake of it, we've got a couple of minutes. I wanted to finish this in 45. So let's take a really quick look at Rune for you and see where we are today. Give you some ideas maybe to go away and have a look at. And then on Wednesday, give me a shout on the stream, mate, and we will definitely look at inefficiencies like fair value gaps. And we'll cover that in a bit more detail. So super quick top down on Rune. So we're obviously interested in these levels. We can see we've reclaimed this, retested it. We've now moved up. Let's get rid of those for now, though, right? Because they don't have any context for what we're looking at. We want a nice clean chart. I want a weekly chart. We see we've taken out this bearish divergence here, which is good. The bullish divergence here was nice. We've taken out this key high here, right? And what I like about this, mate, is that we're looking a little bit like we're kind of using this area as support, right? So let's pop that in green. We've taken that area here. And actually, if we trail this back a little bit more to say here, right, I think we can look how this was, bearing in mind this is a weekly scale, how price has come in and found resistance here, almost similar to as it did here as well, right? So that's probably even more true. Support, close below, retest as resistance, close above on a weekly scale. Look at the retests here and how this is getting bought up. That seems like that's showing a bit of strength here. In terms of targets on a weekly scale, I'd definitely be looking at that, where there's going to be some key liquidity above here. Okay, I would have a little bit of caution because we can see here this order block here. Right, if we're looking at this and saying, okay, this is where the order's residing before this sell-off lower, then we can see we're kind of interacting with that at the moment, all right? Now, on a daily scale, we've had the bearish divergence. It looks like that's kind of playing out at the moment, which is fine. Obviously, if we pop our MA in, we can see that we're currently holding that as well, which is really key. We can see we had these deviations here and here. But again, look, when you get too far away from these, it tends to want to come back to it. Same here, it snaps back. gets away from it, has now snapped back again. We definitely want to see that hold. So we've got this acting as support, gives us a good idea down here. We can see we're getting drawn a little bit higher into this and into this. And then for me, really, I think if I'm looking at what's capping the market here, I can see a really key inside bar pattern here that I think is going to hold a lot of keys to how we trade this. Yeah, I think, look, here's our mother bar followed by the inside bar. Look how beautifully this has been played. Deviation, retest, sell off, deviation, comes back in up to the highs, deviation again, retest. So I'd definitely be looking here, because if we just pop our 50 line on here as well, right? We can see we're now starting to hold below here. Maybe if we were looking to trade this, right? If we think there's weakness, and this is how we can spy good trade setups here, guys. If we think there's weakness in this, and we think ES is going to continue to correct and DXY is going to hold some strength, then this equilibrium here could prove a really good area. We could do something like this, right, where maybe we run up, take out some highs, yeah, and then if we're showing weakness down here, yeah, and price starts to come back down, an underside retest of this, yeah, the low that sweeps the high, I would be favouring short setups into here, here, and ultimately this level down here, which has acted as support, right? The opposite is true if we started to show real strength. I think holding above this level, we'd want to see a clear high set here, right? So this high that's set as we come up, we would then want to see price reclaim that, hold this, yeah, a little purge on liquidity back above on the lower time frames. And then again, I'd be looking for these highs via this inefficiency in here and ultimately this here. But what we can see is this fair value gap here is what's drawing price up here. But this 50 line, in my opinion, is really, really quite crucial. All right. So look, guys, I hope that's been helpful for you. Really, really do appreciate you. You had loads of you on the stream today, which has just been an absolute joy. I know a few of you have had to shoot off. I'm trying to keep these a bit shorter. I just want them to be a good mix between sort of, what I do, how I'm looking at the charts, and then also kind of giving some ideas on potential setups and stuff that you guys can kind of see how they play out, right, and kind of validate the work that we do. So Craig, Bern, Menos, obviously, as well, Jody, Uriel, Anik as well, Asherman, we had Airdrop, didn't we? I think, who else? CS Lychee, Nitpart. Thank you so much, guys. It's always a real pleasure to have you on there as well. Fermi as well. Hey, bud, I didn't see you sneak in there. Fantastic to have you on the stream. Look, guys, I hope this has been useful. I'm going to be back on Wednesday as well. Slightly longer show, and we're also going to do some alt requests as well. Ken, you're very welcome, mate. Great to have you on here as well. Sorry if I forgot to mention you. So, yeah, if you've got any traditional market assets, legacy market assets, crypto you want to take a look at, have an idea, come and shout me some charts on Twitter. Come and grab me over at the Nest. Really, really appreciate you guys and all the time you give up. And yeah, if you do want to come and trade with us, you can find the Bybit link below. Like I say, it's totally free. You get access to all my calls, everybody else's calls, and come and try the free trial as well. Come and be part of a really cool community if you're interested to expand your learning. All right, guys. Look, thank you all once again. Looking forward to grabbing you on Wednesday. Have a prosperous week, and I'll catch you all around the Nest.